Hello everyone, friends. In this video we will talk about the pitfalls of Forex. Why are these traps made in Forex? I will try to explain to you how this is done and how we can get rid of these pitfalls. First, my friends, what are these traps for? Of course, we are ready to fall into this trap and lose our money. If the big bosses are going to cut the price, they have to convince us that it will go up. There are two types of traders in the market. First, these are corporate companies. In other words, they could be big banks, central banks, or even fund managers. Secondly, those of us who work with Forex brokers are what we call retailers. To deal with big money, you must first find their traps on the chart. You must know their traps very well. Second, learn to deal with their traps. As you know, the price has two sides, up and down. In order for it to go up or down, the price must first be unbalanced. So the balance has to be broken. If it constantly buys and sells these, if it continues in a balanced way, the price must constantly move up and down in the balance, at a horizontal level. However, after a while, if one of the buyer or seller group is more or more dominant, more sell orders or more buying transactions become more aggressive, the price increases, direction changes as buyers and sellers enter the market. The balance changes. Balance changes. There are two elements to be caught here. The first thing that will upset the balance is that the sales are more than the purchases. Secondly, there must be a stop loss in a group from buying or selling. Here, the purchase orders of the buyers must be stopped. Or we can see that there are more groups of sellers in the market and the balance turns in favor of the seller, and the price turns down quickly. The blue wax candle you see here is a trap. This wax candle convinces traders that the price will rise. Traders are opening a lot of buys here and the price is going down. The same is repeated here. They make traders like us believe that the price will go up. And we fall into this trap, and after giving buy orders, the price goes down sharply and we lose the money in our balance in this way. Who is setting this trap? Why is he doing it? What is its purpose? Now you know, friends, big moves are made by big players. Whose money are the big players in the markets after? Are they after the money of the small players in the markets? They make money from us. This is true. We call the mother whale a whale. Why is it called a whale? Why is it called a whale? What is the reason? Now put yourself in that whale's shoes, okay? If our goal is to get the money from the little players here, homeless people, then when you start a big move, do you want the small players to be here when you make big moves? Here, how big players trap us small investors, how they stop our transactions. Or I tried to explain in a way that everyone can understand why they have to stop our transactions. Maybe it's not that simple, but at least take it that way. Accordingly, we should always keep in mind who determines the direction and formations that will occur at the top and bottom points or in the direction of the trend. So it's not because we're selling or buying. It's going up because there's a lot of buying. Or, there is an upward movement because the orders of the sellers stop the transactions. I hope I've been helpful to you in understanding what I'm saying in this video. Don't forget to like your video and subscribe to my YouTube channel.